Fair Isaac Corporation date: July 13th, 2025. 1. Basic overview. Item details: company name Fair Isaac Corporation, ticker FICO, country United States, sector industry technology, software, application. Market cap $37.59 billion, share price $1,544.2352 week. Range $1,484.29, $2,402.52. Exchange New York Stock Exchange. 2. Business model and operations. Products, services, operates through two segments. Scores: B2B, B2C, predictive credit scoring, and myfico.com subscriptions. Software, analytics, and decision management solutions. Via FICO platform. Flagship products: FICO Blaze Advisor, FICO Fraud Solutions, and FICO Score Mortgage Simulator. Revenue streams breakdown. Segment revenue contribution: key drivers, scores ~65 to 70% licensing fees. Consumer subscription software approximately 30 to 35% platform subscriptions. Professional services, geographic revenue split. U.S. dominance, majority of revenue. International expansion, operations in 80+ countries. Recent growth in Brazil and Europe. 3. Key financial metrics. Metric value context, PE ratio: 66.68x, elevated versus sector AVG, but aligns with growth premium. PB ratio, NA, not explicitly disclosed. Dividend yield 0%, no dividends. Capital returned via buybacks. Debt to equity low. Net cash position. Minimal leverage. ROE 28.70%. Industry-leading profitability. 3-year revenue CAGR approximately 15%, driven by SaaS. Transition and Scores licensing. 5-year revenue CAGR approximately 14%, consistent double-digit growth. EPS $23.16. Q1 2025 EPS growth plus 22%. YoY 4. Balance sheet strength. Item value analysis. Cash reserves $146.64 million, supports operations and buybacks. Total debt minimal. Levered FCF covers obligations comfortably. Net debt position. Net cash. Strong liquidity. Financial flexibility. 5-year FCF trend AVG $553 million year. Robust cash generation. 5. Management and shareholding. Key executives: CEO William J. Lansing, CFO Stephen P. Weber, Chairman, not explicitly named. Ownership structure. Holder type ownership. Percent details: institutional 89% plus Vanguard. BlackRock insider, less than 1%. Minimal direct ownership. Retail float approximately 10%. Low short interest. 6. Competitive analysis. Main competitors: Experian, Equifax, credit bureaus with scoring alternatives. SaaS Institute, Palantir, analytics software rivals. Competitive advantages: FICO Score monopoly, 90% U.S. lender adoption, regulatory entrenchment. IP portfolio: 200 patents in predictive analytics and AI platform ecosystem. FICO platforms integration capabilities: 911, data network effects, 320M plus user reviews, 52M loyalty members. 7. Valuation analysis. Method value, upside. Downside assessment. DCF $2,196.55 plus 42.2% bull case. Relative to peers: premium. PE overvalued versus sector. Analyst. Target price $2,196.55 plus 42.2%, strong by sentiment. 256. Conclusion: short-term overvalued on multiples, long-term undervalued given AI global growth catalysts. 8. Growth prospects. Strategic initiatives. BNPL integration. Launched FICO Score 10 BNPLT to capture alternative payment data. International expansion. Brazil's rural credit digitization. APAC via Agoda partnership. AI and cloud partnerships. AO's collaboration to accelerate SaaS adoption. Industry tailwinds. AI-driven decisioning. 30% plus growth in fraud detection and credit optimization demand. Financial inclusion. Regulatory push for transparent scoring. Real-time payments. Global RTP market expansion. 9. Risks, risk category details, regulatory scrutiny, FHFA criticism, data privacy laws, competition big tech, fintech disruptors and scoring. High valuation PE 66.7x implies perfection. 23% stock plunge in 2 days international FX. Volatility, 40% plus 9 U.S. revenue exposed to currency swings 10. Final summary and recommendation. Investment thesis. FICO dominates predictive analytics with an unassailable moat and high-growth software. Recommendation for defensive investors. Hold. Await pullbacks below $1,500 for better risk-reward. Accumulate on weakness. Target entry $1,500 for 5-year CAGR of 15% plus. Catalysts to monitor. Q2 earnings. AI adoption metrics and BNPL. Score traction 59. Regulatory clarity. FHFA stance on credit scoring models. Buyback execution. $1 billion authorization.